When you put your hard-earned money in a bank, you're not just trusting the institution, you're trusting the people who run it. But who are these people? Who are the guardians at the very top of our biggest public banks? Well, it turns out there's a whole rulebook for that, a really strict set of checks and balances designed to protect them and, by extension, to protect all of us. So let's dive in and see what's inside. All right, so here's how we're going to break this down. First, we'll talk about why this is so important, what's really at stake. Then we'll get right into the main event, this fit and proper standard. We'll look at what it takes to be a director, what the red flags are, and then we'll explore the firewall they've built to stop conflicts of interest. And to wrap it all up, we'll see why good governance here matters to, well, everyone. Okay, first things first, let's really set the stage and talk about the huge responsibility we're dealing with when it comes to public sector banks. Think about it for a second. These aren't just regular companies. We're talking about the institutions that hold the savings of millions of people, and they're funding the entire country's growth. So yeah, the decisions made in those boardrooms, they create ripple effects that eventually touch every single one of us. So who is it? It's the board of directors. These are the ultimate custodians, right? The big picture thinkers and really the guardians of all that public trust. They set the tone for the entire organization, and their competence and integrity, well, they aren't just nice-to-haves. They are absolutely essential. Okay, so if the board has that much power, how in the world do you make sure the right people get those jobs? Well, that's where this formal framework comes in. It's a standard that's designed to answer that exact question. And listen, this isn't just some friendly suggestion. It's an official master direction from the Reserve Bank of India. This document, this is the rule book. It lays out the exact criteria for who gets to be called fit and proper to sit on a bank's board. So what does fit and proper actually mean in practice? Well, you can think of it like a three-legged stool. First, you've got competence. You need the skills and the experience to actually understand the super complex world of finance. Second leg, integrity. This one's huge. You need a squeaky clean track record. And the third leg is independence. You have to be able to make decisions without anyone else pulling the strings. All right, let's get a little more specific. What does a fit and proper director actually look like on paper? Let's break down the profile. So the RBI sets some pretty clear baselines. For starters, there's an age range between 35 and 67. The idea is to get a good mix of fresh perspectives and seasoned wisdom. You also have to be a graduate, which makes sure there's a solid educational foundation. And maybe most importantly, you need actual real-world experience in a relevant field. We're talking finance, banking, economics, you name it. This is definitely not a job for amateurs. And just as important as what gets you in is what keeps you out. These are the red flags. Got a history of issues with regulators? Or have you defaulted on a loan? Sorry, you're out. Integrity is a total deal breaker. And here's an interesting one. To keep ideas fresh, there's a strict term limit. You can't serve for more than 6 years on any bank or financial institution's board. This makes sure new blood is always coming in. Now, this brings us to what might be the most critical piece of this whole puzzle, what I like to call the conflict firewall. See, a director's loyalty has to be 100% with the bank, no exceptions. And these rules are designed to snuff out anything that could possibly get in the way of that. And you can see exactly how this firewall is constructed. A director can't be a member of parliament or a state legislature. Why? To keep political pressure away from financial decisions. Simple as that. They can't be a stockbroker because that avoids any potential for conflicts with the market. They can't be a director at another bank, which ensures their loyalty isn't split. And they can't be a partner in the firm that audits the bank. That one's just common sense for maintaining independent audits. I really want to linger on this point for a second because it is so crucial. Keeping active politicians out of the boardroom is a cornerstone of good governance. Public money has to be managed based on sound financial principles, not the ups and downs of political agendas. In that firewall, it also extends to a director's own business dealings. The rules are crystal clear. You can't have business connections that could interfere with the bank's interests. You can't have a director voting on a loan to a company that happens to be their own, right? When they step into that boardroom, their one and only focus has to be the health of the bank. So we've gone through the what and how of these rules, but let's take a step back for the big finish and ask the most important question. Why? Why go through all this trouble? Why be so incredibly careful about who gets to be a director? Well, the answer is right there in the RBI's own words. This entire system exists for one simple but incredibly powerful reason, because it is, and I quote, necessary and expedient in the public interest. That's it. That's the whole point. Every single rule, every qualification, every disqualifier, it all comes back to protecting the public's interest. And really, that's the bottom line, isn't it? This isn't just about ticking boxes or bureaucratic red tape. This is the architecture of trust. When you know that the people in charge of your bank are competent, that they're independent, and that they're acting with integrity, well, that's when you can have real confidence. And that confidence, that's the glue that holds our entire financial system together. So we have this really solid framework, right? A detailed checklist designed to find the best possible guardians for our money. But it does leave us with one last big question to chew on. Is a checklist, no matter how good it is, ever really enough to guarantee a person's integrity? Can rules on a page ever be a perfect substitute for genuine character? That's something worth thinking about.